Hello, I'm Hickey from interest.co.nz and welcome to 90 at 9, brought to you in association with BNZ. This is your morning briefing where you get everything you need to know in 90 seconds at 9 o'clock, starting now with news that the Tax Working Group is due to release its report at 1 p.m. today. It will include options for tax reform, mainly targeted at property investors, and also tax cuts for those on the highest income thresholds. We're likely to see the removal of depreciation as a taxable expense for property. Now that's going to hit some property investors quite hard. About $1.3 billion could be raised there. We're also likely to see a proposal for a tax on equity invested in property through the risk-free return method. And there's a potential for a land tax of, let's say, 0.25%. It's unlikely that a capital gains tax will be recommended with any force, and an increase in the GST, which some people have talked about, that's unlikely as well. Key thing is that we're going to see the recommendation for an equalisation of the top income tax rate with the family trust rate. Meanwhile, overseas, Japan Airlines was declared bankrupt overnight. It's going to cut 15,000 staff and probably 34 routes, including potentially the Japan to Auckland and Christchurch routes. And Citigroup produced a big loss overnight, $10.7 billion for the quarter. However, it still managed to pay its staff $25 billion in pay, bonuses and other compensation for the full 2009 year. I'm Hickey. That was 90 at 9, brought to you in association with BNZ.